What's good, gang? It's your boy Steph, and we're back with another trading video. Today, I'm gonna break down the reasons behind this gold trade. There were three basic reasons behind it, and I'm gonna walk this through with you guys. Number one, we know we love market structure. So we have a low, we have a high, we have a low, high, low as it continues up the chart. Then we finally see movement to the downside. Let's zoom in a little bit so we guys can get to see this. You see low, high, low, lower high, new low. That low right here is lower than that previous low, and it continues on, and that's when we see a change of character amongst the charts. All right, that's number one. Number two is the previous daily high. So I actually have marked it out already. It's right here. That's what the P right here, PDH stands for, previous daily high. What the market tends to do is it will purge one previous daily level and then it will race towards the next previous daily level. In this case, since the high was purged, then the low would be what we're aiming for. All right, that is number two. Number three is what I like to call the DeLorean moving averages. Right now, you see that the market is starting to move from having the averages below the candles, which indicates buying pressure, to being on top of the candles, which means seller's pressure. What we're looking for is time and place to be exactly where we want it during New York session. I was not up at 2, 3 in the morning to trade this during London session. Otherwise, I would have had a better entry. But as you can tell, we can move forward. And you see the market starts to move, and then we see New York open right about, boom, New York open. Great, right there. You see markets moving lower, and then what I have marked out already is what we call a fair value gap. That's what this box is. So a fair value gap is just the difference between the last previous wick to the wick before the candle. So this open space right here where there's no wicks coming in, that is our fair value gap. That is the entry I'm looking for. And you see market moved immediately from that entry. So what I did was I waited for market to touch that space. I had my entry at the opening of that fair value. Had my stop loss above the close of that previous candle. And then as you guys know, and if you don't know, I only aim for about a 3-to-1, if not 5-to-1 is the max I will go. The reason why is because I see that greed will really take over and you don't end up getting the trades you want.